What if I told you that a 6% stock drop could be your golden ticket to investment success? Do you know that sometimes the market's knee-jerk reactions can lead to some seriously mouth-watering opportunities? Well, that's exactly what we're diving today into Tesla's Q3 2024 delivery numbers. I know what you're thinking. Felix, Tesla's numbers fell short of expectations. How could this possibly be good news? Well, that's where the real story begins. You see, while the headlines might scream disappointment, there's a whole lot more going on beneath the surface. And that's what we're going to dig into here. We're going to peel back the layers on Q3 performance, dissect the market's reaction, and uncover why this could be a pivotal moment for smart investors. We look at production numbers to future projections, and I'll even share some insights on how I would actually trade this. And I'll walk you through the whole thing here, full transparency. Oh, and in case you didn't realize it, my golden retriever Winston's up 93% on our teaching portfolio this year. He's our head coach, of course. If you want to learn how he does that with 4 paws and 3 simple rules and a couple of hours a week, join us next week for a live trading training at felixprehn.org/training, and I'll break it down for you. I don't promise you results, but I promise to be transparent with you and teach you my rules, because that's our mission here, to make 1 million people financially free. But let's get stuck in and unravel the Tesla delivery mystery. You might want to grab a calculator, of course, although I'll do the maths for you. But first up, we've got deliveries. Tesla's managed to get 462,890 shiny new vehicles into the hands of new customers. Now, that sounds like a lot, and it is, but the number represents a 6.4% year-over-year growth. Again, not too shabby, considering economic headwinds, high interest rates, and all that stuff. But this number is actually a return to growth after 2 quarters of declining sales. So why aren't we celebrating this? Well, look at production. They churned out 469,796 vehicles, so they produced more than they delivered. It's like baking too many cakes for a party. Not necessarily a bad thing if you've got a second party coming up. And the slight mismatch between production and deliveries, which is 6,906 vehicles to be exact, which must be sitting on a Tesla lot somewhere, could actually be good news for Q4, because these cars are very likely to be delivered early in the next quarter, giving Q4 a nice little boost right out of the gate. But the market analysts were not happy. They had predicted deliveries closer to 477,000 vehicles. So Tesla fell short by about 14,000 vehicles of the loftiest expectation. Doesn't sound great, does it? But remember, context is always king. And that's what we're going to explore here next. How did the market react to it? Well, it's a bit of a roller coaster, wasn't it? Tesla stock took a nosedive, faster than Winston chasing after a tennis ball running down a hill. We're talking a 6% drop right out of the gate. Ouch. But as the day wore on, something remarkable happened. The stock started to climb back up, like Winston realizing the ball was actually in my hand all along, though I never tease him. That would be very cruel. But by the end of the day, Tesla stock had actually recovered significantly, closing with just a 3.5% loss. And we'll look at that chart in just a moment when I walk you through what the trade might look like on this, because that candle will teach you quite a lot. And at $249 per share, Tesla stock is still trading significantly higher than it was at its lows in 2024. So what does it tell us? Well, the market looked beyond the initial panic, and the recovery suggests that many investors see this as a dip buying opportunity. They're looking at the bigger picture. Remember, the market is forward-looking. It isn't just about what happened yesterday, but much, much more about what might happen tomorrow and the day after and the month after and the quarter after and the year after. And speaking of tomorrow, there's a rather exciting event on the horizon that could shake things up a lot more than these numbers. On October 10th, yes, the 10th of the 10th, Tesla is hosting a Robo taxi event. Now, I don't know about you, but the idea of self-driving taxis still sounds like something out of a sci-fi film. And I know if you live in San Francisco, you might be in those things all the time from Google, but this event could genuinely be a game changer for Tesla's narrative, potentially shifting focus back to Tesla's future as a tech company, not just how many cars do they put out. It'll be more about what's the recurring revenue on the cars on the road. So what's the takeaway here? Volatility, ups and downs often present opportunities. This market reaction with this initial drop and then subsequent recovery might just be the opening to something investors have been waiting for. Tesla remains the undisputed king in the EV jungle. It's like they've got the secret sauce that keeps customers coming back for more and more, and all those customers seem to be very happy. What's the recipe for the secret sauce? Well, it's a combination of things. First, Tesla has got brand power. It isn't just a car, it's a Tesla. And that's a big difference, right? It's not just a watch, it's a Rolex, right? It's a different thing. And this brand power translates directly into consumer appeal. Tesla has managed to make electric cars cool, and that's no small feat. Sort of like turning vegetables into the most desirable item on the menu. Tough for most. And at the very heart of that is just a founder and a CEO who doesn't really give a hoot about what people think that day. And that's actually the secret. If you look at the genuinely successful companies, the Apples, the Amazons, they were led by people who didn't care about today. They cared about 3 years from now, 5 years from now. And you only pretty much get that with founder-led companies, which is why I like investing in founder-led companies. They just have a very, very different mindset. And there's actually more good news out there. I read some analyst reports, and you know what they're all saying? They're saying, well, it looks like the margin compression, as in the price cuts, are more of a thing of the past right now. And therefore, that will be good for Tesla, because that's really been the one thing that's gotten that stock down, and it's still down. If you bought Tesla at the beginning of 2022, it's down 44%, right? Let me show you this chart here. This is part of our tradevision.io software, where we've got a pretty smart indicator here, which basically says buy when it turns green and then sell when it goes red. And we beat the minus 44% buy and hold by actually making 81% if you traded this. And right now, we called a buy signal here at $257. And I know we're $8 below that right now, but I don't think it truly matters right now. And I'll tell you why. One, the upward trend is still very much alive. Two, we haven't broken through the sort of support levels here. And you might be thinking, what support levels? Well, let me open. If you click on advanced chart and trade vision here, you get a more advanced chart, and it looks like this. You still have the indicator there in the background, that green stuff. And then I just drew a blue line in here, which basically connects here 1, 2, 3, 4 sort of points. And that was the initial upward trend. And our trend has actually gotten steeper, now becoming back. And what you'll notice is that every rally does this. It goes up, it goes down, it goes up, it goes down, it goes up, it goes down. And the question is just, is the trend intact? Further, what you could look at would be, well, what are the recent support levels? Let me draw a line here if I'm allowed. And I'm connecting this high, this one, and that one. And that's at about $234, $35. That's going to be pretty good support just because we've had those highs there. But you can go even further. And that's kind of the magic of trade vision. We actually have here these little red and green bars. The red ones, the biggest one you'll find is where the most market positions are found that are going to support the stock price. So red is actually supportive because these are put options, and the green ones are resistance on the way up. So we know that at 240 here for the coming week, we're quite likely going to have some pretty decent support levels as well. And guess what? That's precisely where we bottomed out yesterday. So knowing this data gives you an incredible edge, in my opinion. And then least but not last, this candle here is Thursday's candle. And is it Thursday's candle, Wednesday's candle? I don't know. Yesterday's candle, whatever day of the week it is. You see, I barely know. That's what happens when you don't have a job. What does that remind you of? A hammer, perhaps? Yeah, it's called a hammer candle. And when you get a candle like that, that looks basically like this, and you've got this little blob here, what does it mean? Well, it means you started the day here. That was the start of the day. This down here was the low of the day, and then that was the close of the trading session. So you went all the way back down, but then you went almost all the way back up. And it's that second yellow arrow here, that one I'm still painting, that's your dip bias. And it's actually often a candle that says to you, okay, we had that dip, but we bounced back up, and therefore it's often a turnaround. So there's a lot of positivity here in this particular chart. And you might be thinking, okay, must be time to buy call options or something. Please don't. If you learn anything on one thing today, Tesla call options at the moment are 97% more expensive than they usually are. Terrible time to buy Tesla call options, okay? Sell some options if you must, but don't buy Tesla call options right now because you're going to pay way, way, way more than you should. So I think it's a bullish setup. I have a trade open already. I bought some call options at a much, much lower price when the IV percent was about 20-ish, which is a much better time to do it. So what are you going to have to do? Well, you probably have to wait till earnings, 16th of October, or maybe till after the 10th of October at least, to get that volatility to come down again and to maybe position yourself back in. Or, obviously you can buy long-term stocks. I'm not telling you to, but that's something that isn't really affected by the volatility magic here. So maybe that was a little bit gobbledygook for you. The simpler chart would be literally look at this and just look at the, when it goes green and when it goes red. And will you make money with it? Probably not. I'll tell you why. You still need a strategy. You still need an exit strategy. You need to have a risk management in place that's automated. Otherwise, you're gonna have a knife fall into your foot. So if you want to learn that too, come and join me on next week at felixprehn.org/training, and I'll walk you through that. And in the meantime, I like this Tesla setup. I've always said I like Tesla. I just wasn't a fan when it was trading at $400 because I thought it was a little overpriced in 2021. But right now, the company is way, 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 way ahead. The robo-taxi thing is, I think, a game changer. I think self-driving is it's just going to come. And I mean, it's already here. We know it. We see it. And there will always be doubters. There'll always be people who say it's not possible technologically and the regulators will stop it and blah. Well, they were also against or in favor of the horse and cart, right? This is the thing that replaces the horse and cart. You driving, it is not a good use of your time. And maybe you enjoy driving in certain spots of the world, but most of the time you're stuck in traffic and it sucks and it's a drain on you and your energy and your time, and therefore people want to be driven. The only reason people don't have drivers is because they're not affordable. That's the only reason. So Teslas will drive it themselves, and initially they're going to make a shitload of money out of it with robo-taxis, and then eventually all cars will be licensed to drive themselves, and that'll just be tremendous. And you're going to pay some sort of subscription service for that, for the ever-improving software, and Tesla will be valued like a Netflix rather than a car company. They just happen to make cars, which is a bit like Apple, right? How much of Apple's profit now comes from service revenue? Massive amount, right? And they sell these phones. It almost doesn't matter if they're making money on the phones. That's what we're going to get to, because they just make money from the subscriptions. And Tesla will do exactly the same thing. They're going to make the cars cheaper and cheaper and cheaper and cheaper so they can dominate, and they're going to very, very smartly collect revenue, recurring revenue, which is what the market loves. So that's my little take on it. I'm not phased at all by delivery numbers up or down or sideways. Who cares? And I'm excited to see you on the 10th of October for what's coming up there. All the best. Do you know that buying into this company could be like getting in on the ground floor of the next Google or Amazon? Well, if you don't, you might be missing out on one of the most significant investment opportunities of our generation.